Welcome back to Keep It Simple. Today it is part 4. I'd like to start off by saying a massive thank you for all the love on the previous videos, and if you have been enjoying the series, then please do drop us a like and a comment down below. It really does help us. And of course, if you're not already, subscribe to the channel because there's going to be more content coming, more education, more trading systems, more live setups, all the good stuff that you guys love. So I'm just going to start off today with a small recap, and then we're going to go into the next part of this trading principle. Remember, the core of this overall understanding is to follow trading principles at their core. Not to complicate things, not to confuse things, not to make things complicated, only to follow the core principle, which is institute in, institute out. If the big guys are investing one way, and they're investing the other way, we will follow that. We have to follow the key principles behind trading, not focusing on all of the small details that realistically are only going to affect given conditions within the market, which of course is giving us that complexity which we spoke about. The more components within a moving machine, the more probability there is for one of those components to fail. And that is exactly the same with a trading system. The more components within a trading system, the more likely it is to fail. So let's get into the diagram section straight away. Here is the quick recap before we go down to the live price charts and we begin to actually show you the principles. Now, of course, all of the previous episodes are going to give you a lot more detail and principle behind this understanding. So I do recommend going back and watching episode 1 to 3. If you have not already watched them, it will give you a lot more detail, and they are relatively short, so you'll be able to watch this whole video series in less than an hour. As I stated before, the core elements of the money in and money out principle is to follow the big money moves, which a lot of people spend their time trying to capture, but focusing on the tiny little details rather than looking at the very clear and obvious areas that price action is being interacted with within the institutional banking system. If we take into consideration the signals that we spoke about that money in and money out represent, we will be able to follow a very clear and concise understanding of movement in terms of where is institute going, where is institute trying to get to, and where is it that they are most likely going to invest within that point. Keeping the money in, money out element as the key principle here, because we're not complicating things, as we stated, we're keeping this as simple as possible, we need to define two things within the market. Where is it that money is going to be coming out? Okay, and where is it that money is going to be coming in? Well, firstly, we're going to establish our higher time frame principle. So let's say, for example, we're looking at a bullish higher time frame scenario here, and price action is clearly bullish. We have the signal to represent that, and price action itself is going up. If this is the case, we need to work out where is price targeting. Now, the reason why this is valid is because money in is going somewhere that the money can be taken out. These two work in direct connection with each other. Money in only has a purpose to get to where money is coming out, and money coming out is going to align us back to where price action is going to allow money to come in. So they are going to be a back and forth money in, money out principle. So if we have money coming in, as I stated, on the higher time frame, then we're going to begin looking for an area that money is going to come out from. Now, it's very simple to do this because all we're looking for is the previous point money has come out. So if we have a previous high, we know that money came out in this scenario. We know that there was a lot of liquidity sitting above this high, and there is potentially even more because all of the opposite side of the market is hoping this is going to continue going down when big money is just looking for an opportunity to put money in. So if we know that money came out at this point, this is the area we're expecting price to go to. Now we need to, of course, wait for money to come in. So taking the principle of money in, we need to locate an area that is going to allow the banks to invest more to introduce price action going higher. And then we can again start to look for a potential area of money coming out. Now, generally, money coming out is going to be higher than the previous area that money left the market, as this is the basic principle of an upwards trend. But without confirming money out, we cannot follow the money in principle. Once we've located money out, aka the high, we can begin to look for money coming in. Now, as I spoke about this earlier, we need to find a previous point money came in. So money coming into the market in an upwards trend would be represented by lows. Okay, now whether this is a liquid low, major low, it doesn't really matter what structural relevance it has. It's all to do with what is Institute doing at that point. So in this case, we have a low. We know that price action created this point. Let's say our major low is here, and this is an internal low. We're looking for the clear signals that money's come out. So we say, yep, it's there. We can see our gaps, for example. We know that money has come in, and it's beginning to come out. Only if we have that out movement confirmed, so right there, we can begin to look for confirming money in. If price action gets down to the area that we're looking at, we can see and confirm that money is still coming out, and eventually we will have a money in movement. Now we can look at this in terms of the original space for money coming down being invalidated, or we can just look for a new indication that money is coming in. So remember, always following the principle we spoke about in the first 3 sessions. The visibility of these spaces is going to be so obvious it hurts. We're looking for that investment coming in to allow us to follow that new principle up to the high, and this becomes a new point money is coming in, and we target the previous point money came out. So we have successfully waited for money to come out of the market. We followed it down to the point money is coming in, and that allows us to follow higher time frame trending bias by simply following the principle of a money in, money out system. We're not looking at structure high, structure low, left, right, up, down, kill zone, midday, lunchtime, end of the day, malarkey. We're looking at very simple, obvious signs that Institute is looking to evolve themselves back in the direction that money is clearly traveling in across a higher time frame consensus and trajectory. So very simple, nothing too crazy. Let's get down to the live price charts. Right guys, so welcome down to the live price charts. Now, as we discussed earlier, we're going to be looking for the principle of money in, money out on an institutional basis. Without this clear presence, it is always going to be hard for you as a trader to be a true, consistent follower of price action. Now, as I've said before, everything I say and do in these sessions are my own personal opinion and based around principles that I have followed, built and understood myself over the years that I have traded personally. This is not a dig at anybody that uses any other systems. I used to use structure predominantly before. I have shifted away from that as it is relatively lagging in terms of indicators. What we're looking at here is the daily chart. Now, the daily chart itself is going to give us a pretty good bias in terms of long-term price movement. Now, the points I want you to just look at is where the first gap opens up for a bullish move after a bearish move has been delivered. And we have consistently a pretty long period of bullish price action. The same thing happens here. We have a bullish gap that is open, and then we create a bearish gap, and we have a pretty long period of bearish price action. Now, of course, there's going to be different parts in price where the time between the opening of this gap and the price action moving is going to be shorter. There's times where it's going to be longer. It, of course, is going to be completely unique to you. You are the defining factor in this because of the time frame you trade, the principles behind your overall trading, how long it is that you like to hold positions for, whether you're waiting for true trend or you're waiting for anything that's going to give you some sort of prolonged period of trading. It's really going to change the principle behind this, but it's always going to be the same narrative and rule set. So here on the daily time frame, we're going to look at price action from this low, and then we're going to follow up, and then we're going to look at price action from this gap high to the point price action changing from money in at this level to money out at this level. When we're going to look for buying opportunities in here and selling opportunities in here. Now, I'm not going to actually show you trade setups, as we're going to leave that for part 5, where we're going to walk you through a rule set and a principle that you can follow. But we're going to apply this basic understanding from this level on a slightly lower time frame. I think we're going to use the 4 hour, and then the high principle, selling through on, again, probably the 4 hour time frame. We're just going to base it off of when price action is delivering a given movement for us. So we're going to start with rewinding price to around here. So let's play this forwards and confirm our space. We have confirmed our space. Right, so we're going to go down to the 4 hour time frame now. And what we're looking for is a confirmation of price action giving us the money in to money out to then money back in. And we can start to look for price running to that previous area of money coming out. Remember, there is no rush. If price action doesn't deliver for us, it doesn't deliver for us. So be it. So right here, we're only seeing money in currently. And we're just looking for that money out scenario. Okay, so here we have the money out scenario. So we can see that there is clear visual representation of money coming out of the market. Now, our higher time frame bias is for price action to run higher, because we know the higher time frame institutional involvement is pointing up currently. So let's see when we get that money in, giving us a trigger to go long again. Currently looking at the money out. Let's play forwards and see when money comes in. Okay, money is in. So from this point, from here, we have seen a bullish movement. So it's only after this candle is formed that we can confirm this. So from here, we would expect this high to be ran and the point to establish a new money out above this level, as we showed you in the diagrams. Price action running up, we establish a new money out scenario, which will become a target, and price action continues to make higher highs and higher lows. So let's play from here. Beautiful. That high was taken out, the area we were talking about. This price action played higher after the point the institutional involvement was confirmed. And we have price action running in a clear bullish direction. So what we're going to do, we're just going to wait for price action to deliver the same thing. The only time this bias would change, or our principle would change, is if the higher time frame changes. So it would be important to look at the daily time frame and confirm or deny the presence of a given move. But generally, if it's looking at sell side, we're going to look to sell. If it's looking for buy side, we're going to look to buy. So it's just the basis of higher time frame principle following lower time frame confirmation within the pre-existing trend. Okay, so in this case, we have a new high put in. Remember, we're using these highs as areas to look for price coming to, because we know this is an area that money came out, and we're looking for money coming in, lower down, so we can begin to buy through those highs as Institute are doing. So in this case, we only see price action deliver higher, which is fine because our bias was long, price action moved long. And of course, this is one time frame out of many that you can use to define a directional bias. Now, many of you may be saying, well, there's bullish gaps here. Why aren't we going long? Well, we need to define a point where price is going down and creating those spaces to tell us that money's coming out. So when we do see a space that's created to tell us money's coming in, it gives us an area that we can focus on for price action to actually run bullish from, because we know this is the area of most probable higher time frame inline investment. So right here, we're just looking for the same principle. So we have a new high and it's immediately taken. Again, this is fine. You're not going to be able to trade every single move in the market. There's another high here. So we'd look for targeting this if we get a money out scenario. Yes, we do. Cool. So we know this is the point where money's coming out. And we're going to look for money coming back in now. Okay, money in. Skipped forward slightly there. Money in. So we now expect price action to run to the high from here In this case, it's not really great in terms of the distance between the money in and the money out situation, but we would still use the same basis. We're not going to sit there and say, oh, it's not worth following. If price action is telling us something, look to follow it. Okay, and then the point has been taken. Once again, price action delivers back in from this level, giving us a clear area price action is delivering higher from. Now, these clear areas are not for you to trade from. So, for example, we're not looking for price to tap into here and run long. That's not what we're looking for. We're looking for this as an area of confirmation that bullish price action is going to be delivered. Where you enter is going to be based on the time frames you choose to have as your entry time frame, your confirmation time frame, and then your daily bias. It's all going to be dependent on you. You're the defining factor here. So let's just see if we get a new space opened up. Okay, highs are just being taken consistently. Remember to check the daily time frame. Still bullish there. So do we create a space now? No, we don't. Still new highs just being developed and consistently being taken. Like I said, this is the 4 hour time frame, so price action delivering to each high is pretty good because we would have been following this for a good few days now. That looks like it's been taken again. Price action taken again. So notice how we're not able to trade every single part of this price action, but we are able to follow it in direction pretty consistently. So we've got another space opening up here. This becomes our target. As long as the daily time frame aligns with this. Awesome. Wait for a money in scenario. Okay, no money in scenario. Still no money in scenario. Let's have a look on the daily. Yep, we're still cool on the daily time frame. Okay, we have a money in scenario. So we'd be looking for price action to run from here up into these highs, which is where the previous confirmation was. And in this case, unfortunately, we get a clean delivery initially from here. Very nice initial delivery. And then we have what's clearly a fundamental based movement coming in and changing the directional bias. So our higher time frame target was here. And we did get a clean delivery away from that area that we confirmed. But this is trading. This is real life. You're never going to see every single point work. Honestly, I'm surprised all of the points that I showed you worked as well as they did. Just keep in mind, this is a realistic basis of scenarios that we're following here. We're not looking at the holy grail of every time you see it, it's going to work principle. We're looking at a clear, higher time frame aligning consensus across time frames and institutional investment. So now we have a gap that is opening up to the sell side. We've confirmed this here by this candle closing. We can now look the same basis, the same principle to occur. Okay, we have a target low created. Awesome. Let's look to confirm that price action running lower. Okay, in this case, we don't ever get to enter, but price action again delivers lower. Same principle. Let's wait for that area. Money in, money out. Okay, so money in. Right, we've confirmed money out. Let's wait for money in again. Remember, it's only money in down currently because our higher time frame bias is sell. Okay, money out. So now from here, we're looking for price action to deliver down to the confirmation low. Beautiful. Exactly what we're looking for. Perfect delivery down. Once we confirm the money's coming out with that space, we confirm the money coming in with a space. So I can sit here and show you this all day, guys, but I really am not going to take up any more of your time. If you have enjoyed this video and you find this concept interesting, I would love for you to join the Discord and show us some of your work. Of course, go and backtest this system, apply it to your own, find a way that works for you. And if you have enjoyed this, please do not hesitate to drop a like, a comment, and of course a subscribe. I would love to see you all in the next one, guys, for part 5, where we show you a formulated trading system based around these principles. Peace and love, guys. Trade safe, and I'll see you in the next one.